All right. Well, let's kick off this show. My name is Andrew Stotts, and this is our valuation masterclass debate. And we got off with a little slow start, and we've got a little technical difficulties, but I think we'll be okay. So I am located right now in northern portion of Bangkok, just out of Bangkok in Nonthaburi, along the river. For those of you that want to take a beautiful, relaxing time away from Bangkok, I highly recommend Kalinan Resort, where I am, which is beautiful. So the company that we're going to be debating today is Nvidia, and what a hot topic it is. The company is, been flying for a while, and so I think it's going to be fascinating. So we do have two debaters. One of them just disappeared, but I think she'll be back in just a second. Before I go into that, let me just first of all introduce our first debater. He is the seller. His name's Roman Letter, and he holds a Master's of Science degree in Investment and Risk Management from the University of East London, UK. His passion is teaching grade 5 students about financial literacy, investing, and entrepreneurship at the Junior Achievement Finance and Business Park in Baltimore, Maryland. And before we go on to Kautar, how are you doing, Roman?
I'm doing great. It's a pleasure being here today.
Yeah, it's fun to get back together. You were in boot camp 15, which means about 9 months ago or so you graduated.
Exactly, exactly. And I had like a lot of help from my team and from you and Moment. Everybody was on board, and I really transformed. Like I learned a lot how to analyze companies. That's very good.
Yeah, it's why I love doing the boot camp, because we're getting better and better at delivering that transformation and helping people get it. So
Yes,
let me
exactly,
introduce, and
exactly,
we want to
exactly.
do a lot more of that.
Hmm.
Before we continue, let me introduce on the buyer is
Yeah.
Kautar Rufai, and she's just graduated from Boot Camp 18. She's a final year economics student from Lagos, Nigeria, holds a professional accounting qualification, is in pursuit of another. Her strong interest in corporate finance began after the CFA Society Nigeria awarded her the title of Best Presenter at the national stage of the CFA Institute Research
Nice.
Challenge. And Roman, isn't that's impressive, huh?
That is impressive. Good job, Kutar. Good job.
Yeah. And that's the beauty of these debates, is that we're going to bring people together across different boot camps and all that. Unfortunately, she's got some troubles right now, so while we're waiting for Kautar's internet to get a little bit better, why don't I kick off with just a few things. So let's talk about Nvidia. Of course, it's an American multinational corporation that designs and manufactures graphics processing units, GPUs, and other hardware and software. Founded in 1993 by Jason Wong and his co founders, the company initially focused on gaming GPUs, but has since expanded into AI, data centers, and autonomous vehicles, and much more. So let's look at this company in a little bit more. Uh, Ultimately, the key here is the integration of hardware, software, and AI leadership, creating a deep ecosystem that's hard to replicate, making it difficult for competitors to displace them.
Yes.
And and a large portion of their data or their revenue comes from data centers. And here we can also see the stock price has been on a strong upward trend since 2023. I mean, it's very rare that we see this amount of market capitalization being, created over the years. Of course, we did have DeepSeek, and I know myself, I've been using DeepSeek a bit to understand some things and understand more about it. But in the case of DeepSeek, it started to show that less processing power and less energy were required, and all of a sudden it put a dent and in Nvidia's share price, with the share price falling, the market cap falling by about $600 billion, which I think is the largest market cap fall of any stock in the U.S. stock market. And then, of course, the stock rebounded 9% just the next day as investors quickly took advantage of the dip. And let's look at consensus a little bit. And from consensus, we can see that ultimately people have rated NVIDIA as a buy recommendation. and there's about 63 analysts on the amount of data that from the resources that we have. We collect 63 analysts and say that's what their recommendations are, and the average upside is still 33%, which is pretty massive. And right now, revenue growth is forecasted 52% in 2026 and 22% by analysts in 2027. I'll just also highlight that margin is massive. Margin is absolutely massive. Now, Kautar is back and hopefully back for good with her situation there. We'll see. But let me just go through a couple of other things. This is the world-class benchmarking scorecard that I developed many years ago to understand a company's profitable growth score. Profitable growth is a combination of profitability and growth. And profitability really is ROA, and ROA is a combination of asset efficiency and expense control. So we can see that Nvidia had a expense control, meaning a net profit margin relative to 610 peers, pretty much almost number one for almost 6 years now. And asset efficiency has been improving mainly because they've been able to increase prices quite a bit, which causes revenue to go up. We can see in 2024 and for the past 12 months that the revenue growth has been very strong. Now, I would highlight that this world-class benchmarking scorecard shows that the company is financially world-class when compared against 610 companies. But don't let that fool you. Just because a company's world-class doesn't mean that they're a great investment. That could actually mean the world knows maybe that the company is highly rated. And so let's look at Nvidia on my global stock tracker. Uh, and basically what we can see is it's the largest of the infotech companies at about $3.4 billion. And net profit margin is a crazy 56%, with ROA being almost 100%. Unbelievable numbers. PE is trading at 50 times and price to book is about the same, which again is a very crazy one. EPS is up 253%, and the share price was flat. And this is over a 3-month period. There's no debt in the company, and the beta is, of course, very high. So that gives you a little background. Let's check in with Kautar and see if she's. Are you able to hear us?
Yes, I can.
Okay, excellent. So we're going to get started, but before we do, let me just tell the rules of the road here. We're going to start with opening arguments, and each of you is going to get 3 minutes to present your case, and we're going to start with the buy side of the argument. So, Kautar, you'll be first, and then we'll have a rebuttal where each side has 3 minutes to counter the opponent's arguments, and then Q&A session of 6 minutes where participants answer questions from me and the live audience, and even from each other if you do have questions for each other. And then we'll have closing statements, so each you'll get 3 minutes to summarize. And I think we're ready. You guys have any questions you want to ask before we get started?
No, everything's clear.
Oh, you guys are ready. I know. Like, let's do it. All right. So, ladies and gentlemen, Valuation Masterclass debate on Nvidia. Let the games begin. Kautar, I'm gonna put you on the big screen, and Roman and I will leave, and you'll have 3 minutes to present. So, Roman, you just stay exactly as things are. I'm just going to remove you from there, and Kautar, it's time for you to take it away.
I'll start strongly with the financial performance of Nvidia. Nvidia recently recorded a 140% year-on-year revenue growth rate. Its revenue now stands at $130 billion, up from about $60 billion, and that difference happened in just 1 year. In fact, its revenue now surpasses the revenues of Tesla and AMD combined. Furthermore, Nvidia's EPS has now grown about 147% to about 2.94, and its net margin stands at 56%, significantly higher than the sector average of about 4%. And so I believe that Nvidia's strong financial performance and indeed financial position protects and provides security for its investors. More towards the product side, virtually every major tech company relies on Nvidia's accelerated computing platforms. Virtually every major tech company. And what is interesting to note is that it's not just Nvidia's stock price that plunged. The entire tech ecosystem in the US stock market is down, essentially. And we know that the tech industry is a growing industry, and so it will rebound. We know that AI is growing, tech is growing, and to even further prove that AI is growing, Amazon has recently pledged to invest $100 billion into AI in 2025. Microsoft at $80 billion, Alphabet $75 billion, and Meta $60 billion into AI. And so we know that the AI market will grow. What is interesting as well is that all these companies are NVIDIA's customers. And so I would expect NVIDIA to further benefit from these investments into AI. Interestingly, again, Nvidia has now captured about 92% market share in AI discrete GPUs, 92%. And so it's safe to say that Nvidia is the market. And so understanding the essentiality of Nvidia's products for the tech ecosystem and understanding the weight of the market share that it holds, we'll begin to understand that Nvidia is still growing and there's still so much room for growth potential. I would also further talk about tariffs because there's a lot of panic in the market about President Trump's tariff policies and how that affects NVIDIA, especially Taiwan, given that NVIDIA imports a lot from TSMC, which is a Taiwanese company. But recently, Trump himself announced TSMC's $100 billion investments into USA, to build factories. And so there's already a political advantage for TSMC coming from Trump's administration, and I think that would trickle down into NVIDIA's performance. It's worthy to note as well that NVIDIA's competitors like AMD also import, from TSMC, and so whatever is coming down from TSMC really will affect the entire market. That's NVIDIA and its competitors, so I don't see much of a problem there. And finally, the elephant in the room, DeepSeek, and I would explain this quickly to say that, DeepSeek is not NVIDIA's competitor. DeepSeek only came with a more efficient way of doing things, of developing AI, of training AI. And so what I would expect from the market is to begin to see a lot of smaller scale operators come into this market and demand, lesser quality or cheaper GPUs. And it's interesting that NVIDIA operates at gross profit margins of about 70%, of over 70%, whereas AMD's gross profit margins stand at 49%. So there's a huge difference. And so only NVIDIA really is strong enough to meet this new kind of demand, demand for cheaper GPUs coming from smaller scale operators. So all in all, I believe that, the crash in the tech market really is all about market sentiment, and the market will rebound, and so will NVIDIA.
Okay, fantastic. All right. Well, now I'm going to hold on. I'm going to remove you and let Roman come in and give us his side. So hold on. All right. Roman, you could hear her presentation, right?
Yes, I heard it
Okay,
loud and clear.
that's great. That's great. So now you got 3 minutes. Take it away. I'm going to leave the room now.
Okay. Welcome. The semiconductor industry has always been cyclical. Revenues come in big waves. Big data center cannot always continue to grow at this astronomical rate. The main risk that I see with Nvidia is that all the current clients are becoming competitors. Look at Amazon, look at Tesla, look at Microsoft. All these companies that are current clients are starting to design their own chips. And Nvidia is in a really peculiar situation because R&D costs are spiraling. Just designing the Blackwell chip costs over 10 billion US dollars. And even if one of the top 3 customers pulls back, it will place a massive hole on Nvidia's revenues. Can you justify 70 times earnings or 40 times trailing sales? It's very hard to justify. Nvidia's gross margins have been dropping from the mid 70s to the low 70s. There's only one company that can sustain gross it's only Visa card was able to do that for the last decade, because they have been able to sustain gross margins of about 70%. I feel that this is in a bubble, and the real Achilles heel for Nvidia is the growing competition that is going to erode the market share. Even though revenues are growing, it will eat into the profit margin. And don't forget, we have a very optimistic CEO, Mr. Jensen. He's so fascinated about AI, but how do we know what AI is going to deliver to us and how fast? Don't forget, Morgan Stanley also states that this year, 4 companies will invest over 300 billion US dollars in AI data infrastructures. These companies are also the top clients for Nvidia. Nvidia's risk is that it is too reliant on a few customers that might bring it down. And
All
yes,
right. Any final thing there?
the final thing that I would say, the rising regulatory pressure, and don't forget, most of the rare earth like metals are coming out of China, and with the new Trump like administration, it looks like those raw like materials cannot come out of China, which are like fundamental to the like production like process.
Okay, good. Let me bring Kaltar back in. So, uh, hold on. Okay, so we had some good arguments from both sides, and I think now it's time for some rebuttal. And so, Kaltar, I'm gonna leave you to have your rebuttal, and then I'll leave you in the room, Roman, to listen in and also prepare yourself. So, Kaltar, go for it.
Thank you, Andrew. So for me, I'll start with the point of, the company can't continue to grow, like you said. But, in 2020, 2021, the company recorded double-digit revenue growth rates. 2023 was over 90%. 2024 is 140%, really. So I think the company is doing a very fine job, disappointed analysts and, continue to grow in at a phenomenal rate. And I think it's unfair to then assume that the company would drop when really it has just continued to grow and there's still so much room for growth. In terms of its customers designing their own chips, it has been found that those chips are really subpar compared to Nvidia's chips, and they're also not of a general nature. They're more of specific nature, so they're not chips that people can buy and then that would take out so much revenue from Nvidia. Those companies are really just trying to cut their own costs, and even those same companies that are developing their own chips have even pledged to buy, Nvidia's Blackwell chips when they are released because they know that they can't do without Nvidia's chips. So I don't see much of a risk yet. I don't think they don't have that competitive advantage that Nvidia does when it comes to producing chips. They just don't, and Nvidia is decades ahead when it comes to producing chips for various reasons. In terms of R&D costs are high. I think that is normal when a company is developing a new line of products to see that they're investing so much in it, and I also don't see so much of a challenge there. In terms of margins, really, it was just the last quarter of FY25 results that we saw that margins dropped to 73% year on year. So the last quarter of 2023 was 76. Now it's 73. But the past 12 months margin is actually 75. So really, there's not much of a drop. And that 73% that came in the last quarter, Nvidia explained that it's because they're expediting their Blackwell production, which is a fairly good excuse. But I think even complaining about a margin between 73 to 76% is stretching it because its competitor operates on a 49% margin. So I think anything above 70% really is too good to even make a deal out of. And you mentioned that the company Visa has retained such high margins. And so what you've confirmed to me now is that it's possible to maintain high margins for a long period of time. And I really don't see why NVIDIA cannot continue to do so, especially if you've cited that a company in the past has done so.
Okay, so good points, good rebuttal. Okay, so Roman, take it away.
Yes, during the last earnings call, Jensen Wang went radio silent when he was asked one question about the Blackwell backlog. If you compare current like earnings call and the one like like previous one, there was a huge like backlog, and Jensen failed to basically answer that like question, which throws me off because Nvidia demand is great, but they had a great like backlog, which they couldn't really like catch up with. So I'm just seeing with the Trump administration, with that dependency on like TSMC, and not clear where the backlog stands, that's a big red flag. Jensen Huang is known to be very optimistic, but what I see with many major like hedge funds managers say, you got to discount everything by at least 10%, or at least divide it by 10, because being over like optimistic might be like a really like downfall. And regarding what you said about the chips that might be inferior, Microsoft already started like in the like USA by producing their own chips. It's called the Majorana One. It's a quantum chip, and they are not relying on anybody, not on TMC. They're building this fab all by themselves. So as long as TSMC is still like dependent on like a foundry, like no, I mean as long as like Nvidia is like dependent on like TSMC for the like production, they are at like risk. And think about all the like tariffs, like people talk about 10, 15, 25%. And like the main reason why I spoke about the 70% like margin, Visa is a dominant player. I mean, like right now, you see competition is coming from left and right. And think about this: Microsoft has been canceling their data center like leases. That shows in like a sign like something is like about to like go on. Like why like would a company like Microsoft cancel data center like leases? Why would Tesla cancel Nvidia chips like last year? Like, oh, we have like enough. Why are people stopping certain like orders? Although they're like developing like the like Ruben already, they're like Lego hasn't even been to full like potential, and they're already busy with like okay, Ruben is coming out maybe sooner as like expected. Where does all that like come from? And think about this: the major like hedge funds are all reducing their like positions. I'm talking about Citadel like advisors like going down to 56 like percent. Look at the major hedge funds in the like USA; they're all reducing and slashing their positions. So short term outlook looks good, but long term doesn't like look good.
Okay, and so that's good. So now we just finished the rebuttal round, and ladies and gentlemen, we're going to go into the Q&A round. And the Q&A round, of course, these Valuation Masterclass debate is sponsored by the Valuation Masterclass. You can become a company valuation expert in months, not years, in the Valuation Masterclass bootcamp. That gives you guys a little chance to catch your breath. So hold on one second. I know we had some questions which I want to get to from people, but also I've got some questions. But let me just go in and look at. All right. So Moment's question is, with that high beta, how confident are you in your buy recommendation? So this one, let's give it to you, Kautar, and say, risk is really high. If it's super high beta and things will start to go down, let's just say the market starts to go down, then with that high of a beta, we would expect Nvidia to go down. So to what extent is your recommendation hinging on the market being strong?
So I would say that Nvidia has always been risky. It has always been a high beta stock. It's the graph of its stock price is literally a graph of zigzags, but an upward trending zigzag for the most of it. So I would say, it has always been risky. It's always a risky bet, and it's high risk, high return. But for the fact that it's the entire tech sector in the market that is down, and Nvidia is one of the strongest companies in the sector, and it's clear that the market will rebound because the tech sector is still growing. It's clear that when the market does rebound, Nvidia will be at the forefront because it's one of the strongest companies. So regardless of the fact that it's risky, I think it's generally a stock for people who have a risk appetite. But I think it's bound to rebound because the tech sector is bound to rebound. So
And I just want to mention that I did a survey, and what we saw in that survey just today, and we got, hold on, let me bring up the survey one second. So I asked people if they were a buyer or a seller of Nvidia. We had 53 votes that came in today, and 31 of them were for buy and 22 were for sell. So the general feeling is buy. Now, what I want to ask about, and I'm going to ask you, Kautar, about this is, you know, it's a little bit confusing for a person that doesn't cover Nvidia. Is all of these we're getting all these announcements from Amazon and Microsoft and the like that they're developing chips. To what extent are these chips very specific for a certain problem or issue they're trying to solve themselves, or are they a replacement for Nvidia? And after you answer that, I think Roman, maybe you can give a little bit more on that because I think that's an important thing.
yeah. So as far as I know, the issue with these companies is that they've been spending way too much on GPUs from Nvidia. And so they sort of want to find a way to cut their own costs by producing some GPUs that they can use in complement, in a complementary way with NVIDIA's GPUs. And so what has been found is that those GPUs, their GPU performance per watt is about 2 to 8 times less than that of NVIDIA's own. So that's about 8 times ROI difference. So, and because they don't have the kind of competitive advantage that NVIDIA does, NVIDIA has about 92% market share in data center GPUs. They just don't have that competitive advantage. So I wouldn't think the chips are anyway in a commercial nature. I think Nvidia is decades ahead of them when it comes to chips. So I would say they're doing it more to help, boost their own costs. Yeah, so that's really it. They just don't compare.
Okay, and Roman, what would be your response to that?
Unless Nvidia diversifies its revenue stream, it will be able to sustain the gross margins. And Nvidia has basically identified a $100 billion opportunity for like GPUs in the medical sector. So designing their own chips, for example, Tesla has a specific goal. They would like to design their own chips for like autonomous, like like driving. So each segment has a specific goal, as you said. But the thing is that if the chip is on par or not, Microsoft has been thriving. If you look at those Amazon Kindles, they don't use NVIDIA like GPUs. Like they're basically based on the ARM infrastructure. That's a company that NVIDIA was trying to purchase in 2020. So like you can see in handhelds, uh, tablets, it's like all over. Like those chips are up to like performance. Look at the Kindle from like Amazon that runs on an in-house design chip that is performing well. So it depends on the specific segment that they're like basically like targeting, like
And
automotive, medical, tablets for like general use.
and Kautar, you see the hair on my face? You see how what color it is? It's
Yeah.
gray. And so I came in the markets in 1993, and I saw so many cases of companies that did really well. Share prices went up, margins went up, business went up. But trees don't grow to the sky. The margins are already so high. It's hard to expect that we would have any margin appreciation. So then it's really a question, can they keep raising prices? Can they keep up their sales pace? And that would have to be necessary to keep that high multiple. You've stated, that you financials are strong and you think there's a lot of opportunity. What is the thing that gives you the most confidence in that?
For me, I think it will be the trend of the increasing market share. That does it for me. Last year was about 80%, now it's about 92%. I'm even worried for the monopoly, like for the risk of monopoly. So for me, that's it. It's their ability to continue to capture market share. If a company is going to stop growing or reduce growing, there will be signs. One of them is not going to be increasing market share. One of them is going to be reducing market share. So if the company has moved from 80 to 92% in 1 year, it says a lot about the processes of the company, and it says a lot about the company understanding the market that it operates in, you know, generating demand and driving the demand. In fact, Roman spoke about this backlog of a thing. Nvidia had so much demand that it couldn't meet up. That's how bad it is. There's so much demand for Nvidia's products that they didn't even have enough supply. So imagine, the case where Nvidia continues to expand. There's so much demand that is waiting for them that they don't even have enough capacity to meet yet. So there's so much growth opportunity, and the company is just not done yet. And I think everything driving the stock price down is market sentiment that will readjust. So.
And Roman, I wanted to go back just for a second. You talked about that the R&D cost is really high. And wouldn't that protect NVIDIA in the sense that Microsoft and Amazon would have to spend a huge amount of money and, they'd end up, still not being able to, gather the expertise that NVIDIA has?
There are two cases for that R&D point. Basically, it costs $10 billion to design the Blackwell chip. but at the same time, to keep that competitive like advantage like going, they're like transitioning into new chips. Like so like they got a whole product line like set up. So the next chip is the like Rubin chip. But a study from like Bernstein states that for every $10 billion lost in revenue, Nvidia will lose 25 cents in um, EPS. So I'm just tying it in like if one of the clients cancels like an order, which runs into like billions, you will see it straight into like EPS. So the risk is there. Like Qatar made a good point, like they got that dominance, like monopoly, but it's all tied to high expectations. So look at the earnings right now, as in the market expect great from like Nvidia, not good. Nvidia's like delivering in the last like, quarter a good performance, but not great as we've seen like 2 or 3 like quarters like before. So it's a risk. Like how can you sustain that with potential like cancellations and all the tariffs, the whole political like landscape. So I'm just seeing that the study from Bernstein like woke me up, as in like if you lose $10 billion in revenue, that will cut in like 25 cents in like earnings.
Okay, we're going to wrap up this section of the Q&A section, and Roman, I'm going to take you out. You got a little bit of time to prepare yourself for your closing statement. So let me do that right now. 1 second. So now, Kautar, before we get started, let me just remind everybody we are now into the closing arguments. Each person gets 3 minutes to present their position, and then it's up to you, the listener and the viewer, to make your decision about NVIDIA. And be sure to let us know in the chat, are you a buyer or are you a seller? So the closing arguments, well, we're about to start them. This Valuation Masterclass debate is sponsored by Valuation Masterclass Bootcamp. You can become a valuation expert in months, not years, in the Valuation Masterclass Bootcamp. So now, Kautar, I'm going to leave this room and give you 3 minutes to take it away. Are you ready?
I am.
Go for it.
Okay, so I'm going to say that, wealth is built mostly by people who know how to be patient and, who know when to enter and when to exit, and people who don't just operate on sentiment or panic alone. If a company is going to stop growing, or if a company is reaching its peak, there will be signs in its financial health. So far from what Nvidia has shown us, they are only growing. And I understand the panic in the markets. The company has done almost 30,000% return in 10 years. That is exceptional. Everybody's waiting for it to crash, but it's just not crashing yet. The company is growing, it's clear in its financials. It has grown to capture about 92% market share in data center GPUs, which is its major revenue component. And so there's really no sign in its financial health that the company is going to stop growing. And so I would discourage panic buying and selling, and I would discourage following market sentiments all the time. I think we should work with a lot of facts. What are the figures? What are the numbers saying? What is your market share saying? What are your margins saying? Nvidia has margins over 70% gross profit margin, and its competitor AMD is operating on 49%. And so whatever shock is gonna, if in fact Nvidia can take a haircut, can take a 10% haircut on its gross profit margin and still be fine. That's how strong the company is. And when you understand that the products Nvidia sells are really essential in the market, and when you understand the market share is 92%, then you see that the company is not going anywhere. It's only growing. I think at that scale, there's only so much there's only so much barrier a company can break. The wall is so high. And I think regarding hedge funds selling some of their shares, just look at the trend of Nvidia. It's just zigzags, upward trending zigzags, right? So I don't encourage anyone to look towards who's selling on or who's buying and make decisions based on that, because the stock has always been volatile. It's a long term game. TSMC is coming to produce in the US. This issue of tariffs is going to be lessened. There's a whole future for Nvidia that I think we should take a long term approach on. Even with DeepSeek, we're expecting more demand from small scale operators, and Nvidia is there to capture that demand as well. It has so many products in line to be released this year. So, it's a growing company and it's 100% buy. Thank you.
All right. Good one. So now I'm going to take you out and I'm going to bring Roman back in and then we'll all come back together. So hold on one second. All right. Roman, you ready for your closing arguments?
Yes, I'm ready.
Take it away.
Nvidia is a momentum stock, and it will remain a momentum stock in the near future. Nvidia is down almost 15% like year to date. The market has not been able to capture all that growth. The stock is not performing well for the last couple of weeks and wiped a lot of investor like value from the stock market. The main thing that I would say is that Nvidia is not addressing the underutilization of its outsourced like production fab to TSMC. If Nvidia is able to produce the chips like on their own, it would be like better to like sustain their gross profit. Data center spending might like slow down in the future. We've seen signs of that, like Microsoft canceling like leases. So Nvidia, I have a strong sell on this firm because I'm not only watching what the hedge funds are basically like doing. I'm just seeing that it goes in swings. It's not a stable stock. It is a momentum stock, and the high like dependency on just a handful of like customers put put the company in a peculiar position. As I mentioned, like earlier on, if it's like one like customer cancel something, you will see that in like a EPS. We might be dealing with a over optimistic CEO that might be flying too high to the sun. Um, how can we justify the current like PEs, which are 25 times, coming down to an all-time low for the last decade? Nvidia was basically trading on 40 times 45 like PE and is now at 25. So you can see the reduced like confidence in Nvidia. So I'm not very like optimistic on this. Personally, I would like invest in energy companies that are basically supplying the data centers with like like energy. Companies like Fistra and like Constellation. This is not investment like advice, but I just see like the data centers, the like existing ones are going to be there. So the company that is going to supply energy to those like data centers is going to stay in business.
Hold on. Excellent. So I'm going to take you out just for a second. I'll bring you right back in. Hold on one second. So that was the valuation masterclass debate for Nvidia. We had great arguments on both sides. And the question is, what do you think? Is it a buy or a sell? I think it's a very hard situation right now. And we had strong arguments on both sides. Now that the competition or the debate is done, let's bring the two of you guys together to just wrap it up. How did you enjoy your debate?
It was great. It was great, and I'm very happy to meet you, Watar. And you're doing great. And I know that you're supported by a great team, and you got Andrew, Moman. You're in good hands.
Thank you. Nice to meet
Yeah,
you
very
too.
nice to meet you.
And how much time did you spend to prepare yourself for this?
About a day. But I recently covered I recently covered the company, so I mean there's that.
Oh, nice, nice. No, I spent about like as you said in the mass evaluation like boot camp, like you and like Moment always said, you cover a company, and you said like when you were in Thailand, you were focusing on the banking like sectors, right? So you're focusing, you want to be good at a specific sector. So I always kept that in mind. So I, after completing the boot camp 15 in June, I always kept on reading news about Nvidia, not into deep, but you just keep a pulse on it. So I just had to put a couple of notes like together, like like a day and a half, like 2 days, because I always keep like tabs on it. And now like I get so many feeds from like Yahoo Finance and also like on Slack. So that's
That's great. Go
Um,
ahead.
yeah, what I like the most about this is the sort of irony in that we know we're humble enough to know that analysts can't actually know the future for certain, but we have to come here and be confident about that future, and it's just a little funny, and then it's just very practical, very enjoyable.
Sure.
Yeah, and it's also important to remember that on average, analysts don't know the future.
Mm,
But there are times where someone may have some real expertise in an area and be able to see a picture coming together. And
mm,
so part of what we're trying to do in the valuation masterclass boot camp is try to help people, form opinions. And I think it's once you start understanding how competitive the market is and the efficient the market is, it can be a little bit of a contradiction. But in the end, whether it's the market or anything else, it's all about what is your opinions and can you support them with evidence. And it's the same thing in business, when you're in a business, if you're in consulting or you got your own business, same thing, you got to come up with strong opinions and then execute on them, and they need to be right. That's the challenge.
yeah.
I'm really excited because we've started these debates now, and they, they're kicking off well, and I thought you guys did well on it. Let's just see. We got a little bit of feedback. So Aliyah says, "Wonderful conversation," and we did get a little. Samson here says, "Nvidia's high growth, high risks for investors aligned with its long-term vision. It remains a compelling buy. Short-term traders should proceed cautiously." And then also, Samson said, based on the debate, I depict NVIDIA as a high growth, high risk stock, right? So, and let's see some others we have. It looks like a buy, but I would sell as I think the company will not get more market share than it has. And Jordan from Bootcamp number one,
Oh,
by the way,
nice.
and he's in Malaysia. And I want to challenge Jordan to get on this debate on a company. But Jordan says nice debate, and so that's great. And of course, we've also got a recent graduate, Abdul Salam, who is just recently presented his final presentation, saying great debate. So great feedback, and I just want to highlight that this is kind of a dream for me because I want to start to bring, to get my analysts and my students who are attending the valuation masterclass to the level I want them to be at. They got to be able to come up here and defend their positions, and not just defend those
Yeah.
positions with, confidence, but with evidence and with persuasion and being able to respond to questions. So this debate now we've done, this is the third one that we've done, and it's my dream come true. And so I really like it. I think we can keep improving it and keep doing it. And of course, I want to see both of you guys back in here someday at another company as you dig in. So that's a challenge. I also just want to highlight that we got a lot of great new things happening in the Valuation Masterclass Bootcamp. Um,
Mm,
in this particular bootcamp, we've kicked off a new thing, which is our weekly assignment videos that we've been creating. We've now broken them into two weekly assignment videos. One where I talk about the formatting, the style, and that type of thing, and the other one where I talk about how to actually do the assignment. And so, how do you write a story and that type of thing? So, that's been one of the big improvements that we've done. And then we've got some other ones. In fact, this time we're looking at the railway companies, that industry. And it's our first time looking at railways. So, I'm really interested to see what students come up with. So, lots of exciting things. So, for those people that are watching and you want to build a competitive advantage in company valuation, the valuation masterclass is boot camp is the place to do it, and you just saw it demonstrated here. So Roman and Kautar, I want to thank you and appreciate all the hard work that you've done to get where you are. And this is just the beginning of great debates on many interesting topics. So congratulations. Do you have any parting words?
Yeah, I want to say thank you to you. I should be saying thank you to you really for the opportunity and for all the knowledge that I've gained because of you. So thank you. And I'm really grateful and honored to be here and to debate on NVIDIA. It was really exciting. And Roman, it was great to meet you. You had really nice arguments and, it was just a lovely debate. So thank you.
You're welcome. Roman?
Um, I'm just happy like to be here. And on the last debate, like I basically chimed in, like listened when you mentioned that I think like AJ is like working with you on improving with the like video. So I think that's a great step for the platform. Could you maybe elaborate a little bit more on what you mentioned last week about creating like a platform where analysts worldwide and students can tap in and analyze company on the ground?
Yeah, so one of the things that I see as an opportunity to build a global research platform. And as we continue to get more and more students through the boot camp and through Valuation Masterclass Professional, then I can really identify the students that I think can really, work from home and cover, and so if we wanted to cover, 20 stocks in Germany, then, I'm going to get one or two German students who are living in Germany to then work for us and for this network of analysts. In fact, right last week, I pitched an idea to launch the world class company mutual fund, where we use our world class benchmarking scorecard to identify the top, let's just say, top 200 companies that are financially world class, and they're sustaining that. From that, then we build a portfolio of maybe 20 of them that we think, from a price perspective and evaluation perspective, look attractive. The purpose of this is to have the highest quality, financially strong companies in one portfolio that people can buy. In order to do that, I need my team to be able to do the research necessary to dig deeper into those companies. And so not only do we have the opportunity to use that research team to support mutual funds and other things that we're doing, we also have the ability to support fund management companies around the world. So imagine a fund manager in New York or London that is in a situation where he needs to, or she needs to, start investing in Chinese companies, but maybe they don't have much knowledge about mid-cap Chinese companies. Well, we can get a lot of Chinese students through the boot camp and get a small number to say work from home and cover maybe 100 interesting companies in China. And then we can provide standardized and quality research to those fund managers as a service too. So there's a lot of things that we can do with this, but the key thing now is making sure I've got the volume of highest quality students I can get and getting them through. So they're either building their own careers or they're coming with us and, building out a global research platform. And our global research platform will have one competitive advantage that nobody else will have. And that is we are on the ground, but low cost.
Yes,
Yeah.
And so
that's
I see
great.
a huge opportunity, and luckily I'm still young, so I see plenty of time ahead to build it.
Good, good, good.
Yes.
I
Yep.
like that.
Okay, great to see you guys,
Like,
and great job. We'll see you in the
okay.
Slack channel, and hopefully we'll see you back here for another company. Great job.
All right.
Thank
All
you so
right.
much.
See you
Thank you.
guys.